Hi guys, and welcome back to the channel. If you haven't already, check out some of the videos on my series of The Beginner Investor, and it's all designed on how to help give you the knowledge to hopefully make your own decisions when it comes to building your own investment portfolio. So today we're getting back into the topic of dividend stocks, and we're going to talk about some of the nuances when it comes to picking your own dividend stocks, what to look out for, and also what you should be looking for when choosing your own dividend paying stocks. We talked about in the last video how some companies pay out dividends and some don't. And first of all, what are some of the instances of companies that don't pay a dividend? Some of the companies we know and love, be it Alphabet or Google, Facebook, Amazon, Biogen, and even Tesla do not pay dividends. Now, newer companies or those in the technology sector often opt to redirect their profits to helping out with research and development or growth within the company or even expansion as well. And they use, rather than paying their profits out as a dividend, they reinvest them and in order to grow further, which can often be reflected by these newer companies growing a substantial amount over short term. Now, older companies that typically have a more solid, little bit of a lower yield dividend typically don't grow too much. They sort of stick around the same stock price, but they constantly pay out either a higher dividend or over time they continue to grow their dividend. Now, when we look at dividend companies, we can fall into a certain trap called the high dividend yield trap. And this is companies that present with a really high dividend yield can be attractive as an income source, because why wouldn't you just choose a company that's really high paying yield and you can just get more income per year? Well, we call it the dividend trap. When a company has a higher dividend yield, say around about 10% or even from 5% to 10%, it's often an attractive investment because you can develop positive scenarios in your mind where you can make an extra income. But that isn't always the case. It's important to be wary of these, as though the higher yield companies may be either underperforming and slowly losing its value, which is reflected in its stock price falling. When choosing a dividend paying company, it's important to look out for these key metrics: its yield versus similar companies in its industry, its debt to equity ratio, how much debt the company has, and if there is a growth issue that will impact its future dividends. Once-off profits can be a really big thing that can sway dividends for just a short term. So if you're looking at a company and it has a really high payout coming up, that can be just due to the fact that it has had a really good quarter or a really good year, but that's not going to influence it long term. And the most important is the payout ratio. That tells us how frequently the dividend is paid out. If it has a really high dividend yield, but it only pays it out maybe 50% of the time, then it's not a great investment as a dividend company. There's 4 key things that we look for in a dividend paying company. It should have a history of dividends over a really long period of time, and also should include dividend growth year after year. It should have really good earnings growth or earnings growth potential, and it should have leverage, and the use of the debt on the balance sheet should be positively geared. It's using its money for better things for the company. And it should have a strong performance outlook for the company and its industry. So hopefully that's helped you guys pick out more dividend companies that are going to help you in your investment portfolio and not fall trap to some of the flashy objects that might be around when it comes to high paying dividend yield companies. Please check out my videos, and if you haven't already, please like and subscribe to the channel. I really appreciate it, guys. Any comments below the videos, I'll take a look at and get my best to respond to them, but I appreciate time, guys. Thanks, and see you in the next one.